G'day folks, my name is Stephen Everett and I'm the investment analyst at Aspect Wealth Advisors. The guys have asked me to consolidate some of the research that I've been doing these past few weeks on the coronavirus and put it into a presentation that we could send out to clients, particularly based on the market moves today. So folks, this is the Aspect Wealth Advisors coronavirus market update. So as I speak to you now, the Australian stock market is going to close today down around 3.2% or 9.5% lower for the week. Keeping in mind that a 10% drop is essentially the definition of a technical market correction. So the virus itself, or the COVID-19, is a type of SARS, or a severe acute respiratory syndrome, and you may remember SARS from around about 2003 when another outbreak like this occurred. So symptoms include fever, flu-like, sore throat, coughing, fatigue, and shortness of breath. You can see in this chart here, which was produced by Goldman Sachs Research, that the actual virus itself, in comparison to others that we've experienced over the years, it isn't quite as severe, but one of the issues with this particular virus is it's very contagious. So it's been more contagious than most, but still yet not as contagious or as severe as the last SARS outbreak. So this chart, again from Goldman Sachs, it sort of highlights how things have reacted to previous viruses in the past. The swine flu was probably not an ideal example because it was right in the midst of the GFC. So if we go back to the first SARS in 2003, you can see that it had roughly a 2.5% drawdown on global activity. The good news is that the growth of new cases is subsiding, both in China. It's said to be somewhat accelerating, outside of China, but the overall growth rate of new cases worldwide is starting to taper. So UBS put together this fantastic chart, which is highlighting the sensitivity of different sectors and markets to an increase or decrease in the severity of the outbreak. Particularly to note here, the energy sector is one of the most sensitive sectors, which makes sense. Energy is a bellwether for essentially global activity. But more importantly, you can see that the real estate and financials in emerging markets is also quite susceptible, which again makes sense because essentially the production in China or in those areas has slowed quite considerably. So to summarize your action items, what can you do from here? Unfortunately, I think my personal opinion is the time to sell is probably behind us now, and that the best plan of attack is to sort of bunker down and and tough it out. But what you can do while you're doing that is you can contact your advisor, review your current portfolio, identify if there's any markets or sectors that you would like to diversify into or that you don't have any exposure to right now, and make an action plan, because at some point in the near future we'll either naturally develop a defense as humans against a virus like this, or it's already been said that there'll be a vaccine readily available by sort of the end of this year, middle of next year. So things will normalize, and at that point in time there's going to be some opportunity to perhaps acquire some assets at a discount to what they would have been if you'd bought in the last 2 to 3 months. So you want to have your action plan derived and be ready to go when that happens. Thanks very much, and I'll speak to you next time.